Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, June 15th. The year's 2020. Let's talk trading. Movement away, towards, across. You know, a lot of people talk about price action, um, reading the market, listening to the market, but there's something that I don't think they understand, that things are subject to interpretation. You put a chart in front of me, I will interpret it one way. In front of you, you'll look at the same chart, but you might have a different interpretation based on your experience, your education, and your particular biases. And that's just something that's not accounted for because they don't talk in concrete terms, they talk in conceptual terms. And I've mentioned that before on videos, and if you're just tuning in, thank you. But that's one of the biggest things. It's one of the trading myths, things like trend and supply, demand, and support resistance. Those are all conceptual ideas. You can say supply and demand exist in reality, but still it's a concept and it's what people buy into. But when I talk about movement, it's either away from something, towards something, or across something. There's no room for debate. Now, fellow traders, I want you to understand that these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. So if you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And while you're trading, make sure that you always have your money and risk management in place, because I don't want you to lose any more particular trade than you're willing to lose. And I'm sure you don't want to lose any more in any one particular trade than you're willing to use. So, Walmal's on the line. How you doing there, Walter? Do I have you? Are you there? Hello? Oh, I thought he was on the line. Anyway, brain management. Make sure none of this happens to you. Especially, don't do anything stupid. I don't want you to have that regret of doing something stupid, because I don't want you to feel any pain. And just remember that pain comes from your reaction to the market. I was hoping to get Walmart on the line, but I guess having some technical difficulties with his phone or my phone. Well, as you can see, all the weekly gaps have filled, and we've got a green candle here today, a 132 pips off of the low green candle at the moment. And you can see we dipped in to the first day of the month's range. We're still putting in that opening range for the week for Monday here today. And you can see price came right back up and through. Inside bar, it dipped in that weekly inside bar from 1 week ago, or I'm sorry, 11 weeks ago, and you see it's risen out of that area by 110 pips. Lots of pairs over 100 again. And you can see here, we barely got into that upper wick zone here. We went through the lower wick zone, broke out of that low there. So once again, simple horizontal line trades moving across something. As far as the open, it's moving away from the open. You see here, we came back from last night. We had a trigger here long, didn't quite hit the pivot. Take your profit. Here you get another chance, hit the pivot. Once again, take your profit. Red rats, get ready to feast. Red rats, get ready to feast. I hope people have loaded up the rat zone indicator. I know there's a lot of new folks really like the idea of the rat zone. Remember, the rat zone, you're trading away from the daily high or you're trading away from the daily low. Whoops. So if we squeeze this chart in, you can see here, I think there was maybe enough pips for the rat zone there. You see, we took out the weekly pivot. I called the weekly pivot yesterday. And you can see here on the weekly, we took it out. And on the daily, we took it out. The pivot traders are trading towards something. They're trading away from the open and towards the pivot. Once again, we tapped into that upper wick zone from the previous day. You can see here in and out of the lower wick zone. Price action at the line. Once again, you're trading across something. So I don't care who the trader is. If I say price is below 125.70, if it gets there, you trade with the movement. The movement is up towards the line. You're trading across it. So price will either close above it or it won't. This is very basic, very simple, not hard to understand. You don't need any special indicators. I mean, you know that price is ending in the zero. You can just look at the chart here on the side. You can see where they end in zero. You see, there's your price right there. The smart ranges. Yesterday, I created another version of smart ranges. I call it smart ranges all. So instead of selecting which one of the ranges displays, I just display them for all. And so you can see here, I've got the H1. This is the H1 chart right now. You can see H1 there, H1 there. And then you have the daily, the weekly, and the monthly. You can see here, this is the highlighted magenta. And I also put in some minimum and maximum thresholds. So if it's over 80, it'll be a light blue. If it's below 20, it'll be a darker blue. And if that bar is green, the other numbers that aren't outside the thresholds will just show green. So you can see here on H1, high minus the close, we come back 22 pips, 21 now. Close minus the low, 19. High to open 40, open to low 0. It just took off right from the open. High minus previous high, 33 pips on that breakout. So once again, something very simple, easy to understand, should be easy to understand and easy to use. And the percentages are just a percentile. So out of the last 100 bars, in this case, 86% were lower. In this case here, high minus open, 95% were lower. So you can see here that at 95%, it pretty much ran its course. And then you can flip over to the daily or the weekly or the monthly. And the reason I put these up, so you can pinpoint where you might see a reversal. So for example, high minus low, when it made that new high, you see it was at the 67 percentile. That's 2 out of 3. So maybe it's done for the day. Might not be. For the week, let's see, high minus low, 149. That's only 10%. There's a lot of room left to move in the week. And for the month, we've got somewhere right around 44%. So, that's close to 50. It might be a coin toss whether or not we get any more monthly range. Can't really say at the moment. For the week, once again, only 10% range. So there's a lot of movement that can happen. Now, one of the things, another reason to look at this is because when the daily makes a daily high or low, it might also be making a weekly high or low. And so if you're doing a rat trade, you might be trading off the weekly high or low for, the big bucket load of pips. So this is one of the reasons why you want to look at it. And then ditto, one of those days it's going to make the monthly high, and you'll be trading out of the monthly rat zone once again for buckets of pips rather than handfuls. So it's just something to remember, something to be aware of, and that's one way to make those buckets of pips rather than scalping. Because Walmall and I, we talk a lot about, do we just want to go for 2 pips or do we want to go for 20? And how do we do it? Um, and we go back and forth because part of the problem is if you're up 5 or 10 pips and you're trading any size, it's hard to give back a couple $100 every time it moves a pip or two. That's just part of the psychology. So it's just something to consider. So, fellow traders, I think that's about it. I don't remember any questions in particular. Oh yeah, if you're new to trading and you're new to MT4, there's something you should probably be aware of. And yeah, what you should be aware of, I had to pause the video for a second there, is that if you don't understand something, Google is your friend. For example, if you don't know how to load MT4 indicators or templates, you could either go to Google or go to YouTube. If you type in, how to load MT4 templates or how to load MT4 indicators, you're going to get dozens of videos how to do it. And it doesn't matter if you get the indicators from me or someplace else, they all load the same. So that way you'll teach yourself, because I'm not making those type of how-to videos. It, because other people have done it. They're probably much better at it than I am. Because that's not where I'm focusing my attention. So that's just something. There's a lot of things you can do for yourself. So before you ask somebody a question, a technical question or something, go to the search on Google or YouTube and see if you can figure it out yourself. Because if you figure it out yourself, you're going to have pride of ownership. You're going to go, hey, I figured it out. You're going to feel really good about it. On the other hand, if you're struggling, you try and figure it out, you still can't, by all means, ask a question. Put it out in one of either the Facebook group, put it out in the YouTube comments, because if I don't see it, within a certain amount of time, maybe somebody else will chime in and give you the answer you're looking for. That's how we work together, as a trading community. So it once again, really, you got to put the time in. It's like you can join the gym membership or get a gym membership, join the gym, but you got to go there. And then you got to do something. It's the same way. Sure, you can load up the indicators and you can, kind of mess around. But if you really want to learn something, focus. Pick one method, whether it's the rat zone, the buy zone, or some squiggly line trade. Doesn't matter. Focus on it. That's it. Pick one pair or one instrument. You might be trading the E-minis or a stock. Just pick one. Cut down on those variables. I can't stress that enough, because the market is a big enough variable in itself. And once again, reading the market, the market isn't telling you anything. You are interpreting what's happening in the market. People say, oh, you got to read the market, you got to learn. No, that's not quite it. That's not really accurate, because you have to observe what the market is doing and hopefully you accurately interpret it. Is it going up? Is it going down? And if you can accurately interpret if it's going up or down, then so long as you have your risk management in place, it should be game over, meaning you should be able to bring in pips on a regular recurring basis. So, fellow traders, just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And once again, if you're new here, thanks again for stopping by. Please subscribe and click the like button, and also click the bell so you get notified, and then go down and share the video all over the place. Somebody said I deserve more views, so maybe you guys can help me out. Okay, this is TheRumpledOne signing out.